The real reason the SEC has been pushing back on a spot ETF for Bitcoin, GBTC is about to instantly make $6 billion on their approval, and they're holding 600,000 Bitcoin. Spot ETFs are 75% likely to be approved this year. It's been over a decade since the Winklevoss twins applied for the first Bitcoin ETF, and will March 2024 be the beginning of the Bitcoin bull run to 100K and beyond? Welcome back to Crypto Daily, everyone. A bunch of news to cover today. Obviously, all the attention and focus is on GBTC and Bitcoin ETFs, as it kind of has been for a while. But Grayscale, made big headlines yesterday by winning a big court case against the SEC, where the SEC was essentially called capricious, and definitely good news for crypto in general. Good news for the ETF case, and we'll start jumping into that. So Bitcoin was trading at 27K this morning, kind of been fluctuating in that 27K to 27.5K. So there was an interesting article, obviously an opinion article in Bloomberg today, and they were talking about the difference between a spot ETF and Bitcoin futures ETF. So I thought that whole conversation was pretty interesting, because a lot of people don't really know the difference and don't really know why there's been a Bitcoin futures ETF and not a Bitcoin spot ETF. So the basic rundown is that a Bitcoin futures ETF, and they've got it here, is that you don't hold actual Bitcoin and you don't settle in Bitcoin. You actually settle in cash. So with a futures ETF, you essentially park it in like treasuries or cash equivalents, and then futures trading happens. And then when futures expire, then you settle up, but you don't settle in Bitcoin. So obviously, with futures, you're not really trading Bitcoin itself, but you are very closely tied to Bitcoin. Compare that to a spot ETF where you're actually settling in Bitcoin. So whatever the ETF is, they hold 1-to-1 Bitcoin, or whatever ratio is determined when the ETF's created, in terms of Bitcoin to shares that are issued. So that's kind of the main difference between a spot ETF and a futures ETF. And the reason why Grayscale, or one of the driving reasons why Grayscale won this case, is that they were arguing that there's Bitcoin futures ETFs that are approved, but their spot ETF hasn't been approved and has been blocked by the SEC, even though they are very closely resemble each other. There's not much that's different about them from a structural standpoint, and the SEC arguing that it's unsafe for investors to get involved in a spot ETF versus a futures ETF is completely baseless and arbitrary. And obviously they won that. They won that argument. So seeing that Grayscale has traded, so GBTC is not an ETF, it's basically a closed fund. And they have $16 billion worth of Bitcoin. And they've traded at discounts and premiums throughout the years, just kind of depending on the market, depending on a lot of different factors. But they don't settle in Bitcoin, kind of like a Bitcoin futures ETF, but a little bit different. They don't settle in Bitcoin either. So trading at a premium and discount is possible because there's no arbitrage. You can't arbitrage Bitcoin to GBTC. Seeing that there's that big discount right now, if Grayscale were to convert to an ETF where they do settle in Bitcoin and they do allow that two-way arbitrage, you would literally see about $5.7 billion in value get added to GBTC, because it's at a 25% discount. So just something interesting to follow in terms of GBTC. If they do end up converting to an ETF, there's going to be a lot of money that gets made pretty much instantaneously. So from Dylan LeClaire on Twitter, don't forget how large GBTC is. They hold around 600,000 Bitcoin, and they were the largest single driver of the 2021 bull run from an inflow standpoint. So the discount right now, actually the discount move was 26% to 17%. And that is the equivalent of 56,000 Bitcoin returning to the assets under management of GBTC if shares are marked to market. So like I said, a lot of value is going to flow into GBTC if they do end up getting this ETF approved and actually converted. Here's from Will Clemente. He was tracking the discount rate of GBTC, or the premium. So obviously the last time it was at a premium was back in January 2021. And then ever since then, it's been at a discount. The lowest it got was 48%. So like Bitcoin, not using actual numbers, but like, for example, Bitcoin would have been like 50K and at a 48% discount, GBTC was like 25K. So obviously a huge difference. Right now we're only 18%. We saw a big spike on that news from yesterday. So something to watch. Obviously there's going to be some speculators, and that's why you saw it go from 26 to 18% discount, is because there's speculators saying, okay, well, if they get the ETF approved, that's like an instant 18% that I can make. So kind of interesting to watch that discount and how it moves based on the news. If you see any fluctuations in the news, like the SEC has a chance to kind of fight back on the ruling. So you could start to see a lot of volatility in the discount of GBTC. So Bloomberg analysts, given the news from yesterday, now say that ETFs have a 75% chance of being approved. So obviously the whole market is watching for ETFs. We're looking at that as being like one of the key drivers for the next bull market, along with the halvening that's coming in March 2024. So, I think that it's more than likely that an ETF will get approved. I think the fact that BlackRock has an ETF is kind of a given. So we'll see what happens. So this is a fun piece of history for Bitcoin, but Cameron and Tyler Winklevoss have been in the industry for, pretty much as long as anybody else. And they filed for a Bitcoin ETF over 10 years ago, called the Winklevoss Bitcoin Trust. So just an interesting piece of history. I don't know actually if they're still in the running for an ETF. That'd be a good thing to look up. So X, formerly called Twitter, now has a license to store, transfer, and exchange Bitcoin and digital assets for its users. So X has been making headlines the last couple of days that they've been getting all these different licenses in different jurisdictions for financial activities. So, this drives a broader point, and something that I've believed pretty heavily in, which you could obviously see with my work with Leo, that social media and finance are converging. So a lot of people are calling that social-fi. But you are seeing more and more interactions between social media and finance. And I think X is moving in that direction. Elon Musk has talked a lot about how he wants to turn X into the everything app and allow for, transferring of money, payment of bills, all sorts of stuff. So, obviously this is starting to crack on the doors of like Venmo and PayPal and other companies. Allowing digital assets and Bitcoin is going to be bullish for the crypto industry on X. And I think it's more than likely that we see something related to crypto on X before the end of the year. They're already kind of beta testing this like credits thing. So I'm pretty bullish on X adding some sort of crypto to the platform. And like I said, the whole social-fi narrative is kind of heating up. And I think it's just going to keep getting more and more trenched in social media. So will the Bitcoin ETF decision get delayed this week? So I think we're 3 days out, maybe 2 days out actually, from the BlackRock Bitcoin ETF decision having to get made. So going to be interesting to watch that. But this tweet from Dan Crypto Trades, I don't follow his trades super closely, but he does post some pretty good analysis on the markets. So if you look at March 2012, March 2016, March 2020, you can see that Bitcoin did pretty well after those events. So that is the halvening every year, or every 4 years, sorry. And in March 2024, we have another halvening. We also have the final ETF deadlines. So if they get delayed this week, they'll get pushed to March 2024 for BlackRock's ETF filing. So that kind of coincides really nicely with the halvening. So are we on the verge of a massive bull run? I saw Pomp was just on CNBC, and he was saying he thinks we're on the verge of a massive bull run when the halvening occurs, because it's coinciding. If you get the halvening in the same year as a Bitcoin ETF, Bitcoin Spot ETF getting approved, that's going to be super bullish for the industry. I think Tom Lee is calling like 185K Bitcoin. Obviously take Tom Lee's predictions with a grain of salt, but will be cool to follow. And Bitcoin is making front page news. So, I think in my opinion, I think we are on the verge of a massive bull run for Bitcoin. I would see us going up a lot, come March 2024 with the halvening. We've seen this cycle play out so many times at this point. The other cycle that's going to play out is that right now people are not talking about Bitcoin and crypto too much, like normal people. So obviously being in this industry, we are always talking about it, but go back to the massive bull run in 2021 and you'll see that like everybody and their mother was talking about Bitcoin and crypto, and they bought this altcoin, stuff like that. So right now we're in the lull. I talked about that yesterday. We're in the very low environment in terms of like people actually talking about crypto. So we're kind of just on the verge again of people starting to talk about it. So I'm sure come March 2024, we're going to start to see a lot more people talking about Bitcoin. It's going to become kind of like 2021 where everyone was talking about it. Everyone was buying altcoins. Probably going to happen again. And final piece of news here. So the SEC just charged Impact Theory, which is based out of LA, with selling unregistered securities. So among other things, Impact Theory emphasized that it was trying to build the next Disney. And if successful, it would deliver tremendous value to founders' key purchasers. So Impact Theory raised approximately $30 million from hundreds of investors, including investors in the United States, through the sale of NFTs. So, this, like, step back from the actual press release itself and try to look at the broader picture of regulation. This is kind of the first major action against NFTs. But the key issue here is that if you're a company and especially if you're based in the US, and you're raising money by telling people that they can make money if they buy the thing that you're selling, then you are selling a security. I mean, if you look at the Howey test, it's just very clear. So this is not to say that every NFT project is now going to be under fire. I think it's the NFT projects where a centralized company came out and said, we're selling this NFT and we're raising, kind of a specific amount of money, like $30 million. In exchange for buying our NFT, you get to participate in the value growth of our business. So when you say stuff like that, that is what is going to get you into trouble when you structure it that way. So there are plenty of other NFTs out there where you earned them or you had to do, XYZ activity in order to get them. It wasn't something where you had to pay to mint them. Obviously, most NFTs are pay to mint. So I think other NFTs and something that, I've personally worked on is engaged to mint NFTs. So there's kind of this whole other subset of the industry that isn't covered by stuff like this. So I think they got slapped. Yeah, they got slapped with like a $6 million fine. They had to, shut down certain activities. So I don't think anyone's going to jail over this one, but I think the big news is that it's kind of the first major action against NFTs. So we'll have to see what happens with other companies that released NFTs. I know like Adidas did some and other companies. So we'll have to see. But that's all I got for today, August 30th. I will catch you guys tomorrow.